Well, welcome back, everybody. I'm John Muschalek with HilltopSecurities. We are back with Tom Kozlik, the head of public policy and municipal strategy for HilltopSecurities. Tom, it's the summer edition, right? We're back, but just recently we got passage of the one big, beautiful bill, right? Which included all of the tax implications. Particularly I want you to talk about, the question we had around the preservation of the municipal tax exemption. And then how do you see this new bill shaping investor and municipal strategy here in the near term?
Yeah, I think that investors and issuers dodged a bullet here. I think that the only reason that the exemption wasn't eliminated or used for pay for is because lawmakers decided to add $4+ trillion to the deficit. Right. Now, the tax exemption wasn't actually put on the chopping block the way that a portion of it was back in 17, but with the debt to GDP ratio and the deficit rising, if anything, one of the big implications from my perspective is that the passage of this makes it so the risk could even be higher. Now there's nothing in the future. Now there's nothing imminent. Like one of the reasons of why it is that I thought it was imminent this year was because the 2017 tax cuts needed to be extended. However, there is a reconciliation bill that's going to likely pass again this year, another reconciliation bill next year. So I think that, again, we dodged a bullet, but I don't think the tax exemption is safe.
Okay, so this kind of feels like the Olympics a little bit. Every couple of years, the same subject keeps coming up, right? How do you feel like that is secure going forward? I mean, is there anything else we need to be looking for? Obviously, the $35 trillion is still going to be an issue, right?
So as far as investors are concerned, we dodged a bullet. I think that, and from an investor perspective, there's still a high level of policy uncertainty, but from an investor perspective, I think that it's important to watch to see what happens over the next couple of months. From an issuer perspective, I think that the issuer community still needs to educate and advocate to folks in Washington to make sure that they understand the importance of the tax exemption.
So it's an ongoing thing.
Correct.
Okay. So recently with some of the inflation data, we saw municipal yields jump a little bit, right? As we look forward with the shifting interest rate environments and expectations, how should we be thinking about the implications for municipal strategies in this kind of market?
Yeah, so we've been talking about this closing window of opportunity. So what's been happening since we last spoke about a month ago, the window is still open, but it's continued to close.
Right.
Over the last couple of days, the window kind of opened up a little bit more because yields kind of jumped up a little bit because of the inflation data you're talking about. So big picture, the window of opportunity to take advantage of these generationally attractive yields, it's still there.
Okay.
But in the next couple of months, especially if and when the Fed starts to lower, it could close.
The Fed. So football season's right around the corner. One of the hot topics every year when football season starts is who's on the hot seat, right? And that would definitely apply to the chairman of the Fed, right? Seems like every day you see something about whether there's going to be a change there or somebody going to resign, get fired, et cetera, et cetera. So how should we think about the potential implications on the markets and the monetary policy should there be some voluntary or involuntary change at the head of the Fed?
So the Fed's contract is ending more or less at the middle of next year, right? So he's trying to kind of run out the clock. And I think that what you're referring to are some of the comments from the president from this week,
yes,
where the president has specifically been saying that he doesn't want the Fed chair there anymore.
Right.
Now, I think that the Treasury Secretary addressed that well during an interview where he said that what the president's doing is kind of like working the refs, right? Like working the referees during the game,
right?
To use your analogy, that's what the Treasury Secretary said. Now, and I think that's probably right. What I'm concerned about is I'm concerned that at some point there could be the development of some like a shadow Fed chair. Now, there's been talk around the periphery of that, but that's one of the things that I'm most concerned about because that could decrease the respectability of the Fed. So I haven't seen that develop quite yet, but there is talk about that.
Okay, so let's look forward a little bit. I'm going to kind of put you on the spot here. Yeah. We've got 4 Fed meetings left, one coming up at the end of July, then we move out to September, and then 2 more coming in the fourth quarter. What are we looking for?
So You're not going to like this answer because this is the answer that they're given. They're going to be data dependent.
Right.
And I think that the Fed is handling it right now the way that they should be, right? And I think that I think that the inflation data probably very well could have taken a move, probably definitely not in July, probably not in September. Could we see one at the end of the year? Again, I think it's going to be data dependent.
Well, as always, Koz was right. I didn't like the answer. Come on, everybody wants to know when they're going to come. But that's all we have today for the Muni Minute. Thank you, everyone, for watching.
Thanks, John.
Thank you.